So we're just about to start, and we're really thankful that you could zoom in and spend the day with us. So, or at least the next 50 minutes. One of our panelists who's here streaming is Laurie Lucian, who is the CEO and founder of Major Bloom. She's a lot of things. She's an attorney, professor, entrepreneur, and transformational speaker, and her bio is obviously in the booklet, but what I found most inspirational, at least for me, is Laurie helped over 16 people obtain their certifications for economic empowerment priority status here in Massachusetts by holding free workshops for prospective applicants during the application window. And I think that's pretty cool. You know, not just helping yourself, but helping the community. We also have Patrick Ryder. Patrick is actually, this is your third year with us, so he's family. Laurie, this is your first, but certainly not your last.
I hope not.
Patrick's Senior Vice President, Management and Professional Liability, Segment Leader at Hub International, and I call him my D&O guru, especially for cannabis stuff.
Yes, sir.
Katrina Skinner is next down the line. She is, formerly of B&L. Actually, this is your third conference as well. She remained special counsel to B&L, but she's now also general counsel and chief banking officer for Simplifia, one of our sponsors, actually as Hub. Actually, all you are sponsors, so that's good. Kevin Michelin is with senior manager at Cohn Resnick. I don't think you've spoken at this, but I know Cohn's been involved since day one. I think it's usually Greg that gets dragged on, but you finally got the spotlight. So thanks, Kevin. And Kevin specializes in buy-side M&A tax advisory, but more importantly, he's a cannabis tax lead and also has been very much involved in thinking about issues around 280E and are there ways to structure to kind of ameliorate the harsh effects. And I was offered $5 to butcher someone's name on the panel, so continuing the tradition. Jacques S. Tucci, or Jacques Tucci as we call. Can I have my $5 now?
Yeah, I got it.
So this is Jacques' fourth year?
I think so, yeah.
And the first year we had your wife, so kind of all in the family, you guys get five check marks.
Yes.
So Jacques is president of Nucleus One Consulting. They are a management firm specializing in the cannabis industry. But it's more than just that. Jacques also has a small turnaround company. I shouldn't say small, has a turnaround company also because, you can never have too many businesses. Yeah. And you've been starting to do some turnaround work in the cannabis industry as well as non-cannabis. Yeah. So welcome everybody. And so let me start with you, Patrick. Sure. We're talking about this entire day actually about innovation, about disruption, about pushing forward. And I know, but we're also tying that to regulatory change, legislative change, or sadly, in some cases, regulatory inaction or no change and legislative no change. Where does the insurance market stand right now, especially for regulatory risk in the cannabis world?
So I think for cannabis risk specifically, private companies are struggling right now with the way that coverage is geared towards the entity itself and whether or not there's regulatory coverage for an action brought against the directors and officers or the entity. That's all changing probably in January of 2022. We've got some new markets, some new capital coming into play right now, so we'll see a lot of changes in the way that policies are written and the coverage is extended. We are trying very hard, Scott, to normalize the insurance industry for the cannabis world, and it's been a labor of love, as you know. And so for private companies, things are changing pretty rapidly. On the public company front, it's a little bit different. Entity coverages for securities claims, and we still struggle there with capacity. Although, I don't know, probably about 4 months ago, we stood up an MGA that now can operate in Canada and the US. It's called QuadScore. And it's kind of a big deal because the pricing for public company D&O is astronomical. $200,000, $300,000 per million of coverage is a really big number. And then there are some discounted markets out there that aren't doing the right thing, writing domestic policies to try to secure coverage in Canada. And there are some regulatory issues there from a tax perspective. specifically with the CRA, and these new entities that we're standing up right now, we'll probably see one more by the end of the year that we're working with to provide real coverage for publicly traded companies and capacity that's needed, especially as we start seeing more and more domestic issuers.
So let me just ask a follow-up about private company coverage, and I'm thinking about Major Bloom for a second. I'll tie this all in that way. And so Laurie, obviously, D&O insurance is extremely expensive. I think I know it is. I shouldn't say I think. I don't know if you've looked into it, but will your private product, let's say, for the private companies in D&O, how does that work for someone like Major Bloom, which is really, a startup? They have, I think, one store open, a few more on the way, plus delivery. But, obviously, EA applicant, more or less self-funded or with debt or their own capital.
Great question. D&O coverage.
And Laurie's listening.
And Laurie's listening. So I'm going to talk to the TV. So ignore everyone else here. Here's your $5, by the way.
Okay, thank you.
Okay. Realistic.
50%?
50%?
Well.
That's a high commission.
Send this down. Oh, there we go.
So for a self-funded startup kind of company, D&O coverage can do a number of different things. But realistically, we're looking at shareholder type related actions in private company. So if you don't have that exposure, it's probably not the first line item that you want to add to your budget, right? But as we start getting into, and we're going to talk a lot about social equity and what that's going to look like, as you start getting into investigations and whether or not you're truly a social equity applicant and you're going through the process of that, and you can incur significant amounts of legal costs going through those investigations. With entity coverage carved back into a private company form, you could, in theory, have coverage for those types of investigations to pay Scott to make sure that you're okay.
So there might be, this is new though, like coverage for regulatory actions, in the cannabis space.
Yeah, so we had about 5 markets in the cannabis space, 2 of which were writing private companies on a public form. And they were really, really expensive, right? $175,000 for $1 million worth of coverage. Not a great trade-off there. And then at the bottom of the barrel, you had markets that were charging $13,000. At $13,000, you were getting very limited coverage, if any entity coverage at all. And certainly there was a regulatory exclusion. So you just wouldn't have that available to you if you were, bottom of the basement shopping. But if you were in a public form, entity coverage is only designed for securities actions, so it wouldn't respond to a regulatory advancement unless it was made specifically against the directors and officers. The entity was left bare, no balance sheet protection. What we've done is really worked with a couple markets and bring some capital into the space to change that, and again, normalize the coverage so it looks like a widget manufacturer and take the cannabis out of it.
Well, so then let me turn to another product that might be helpful to Major Bloom and to Laurie. And I know you're doing work with benefits and perhaps benefit captives for benefits.
So everybody in this room is here and is familiar with the cannabis tax, right? Everything costs 3x, 4x, 5x. The same is true in insurance. And so we've been, in this space for a long time and trying to develop solutions where it's just been bare. And one of the things that we've looked at is captive structure. It gets bandied about, and you've probably heard it if you're an operator. There are good captives, there are bad captives. Like a group captive for directors and officers doesn't make any sense. You would never want to share your coverage for your personal assets with somebody that you don't know. Conversely, if you've got a group of individuals, or belly buttons as we call it in the EB world, right? You got 50 employees, they're all 26 years old, they're a great demographic for an insurance carrier, but you're getting lumped in with 26-year-olds who are working, as longshoremen or truck drivers, or think of a higher hazard class there.
Lawyers,
for sure. Heart attacks, right, Scott? Your demographic's not matching up. So what we did was we created a captive out of Bermuda and designed it specifically for cannabis operators to say, we want to take advantage of your lower demographic, your lower risk demographic from a carrier perspective, and get you out of this big pool. It's going to be available on January 1st, 22. So if you guys are going through open enrollment now, find me in a minute and we'll talk.
There's a table right out front.
There's a table right out front, right outside the door. No, in all seriousness, it's a different way to approach risk and return some control to the operator and get it out of the insurance company's hands. Right? I don't work for an insurance company. I work for clients. And our job is to find the best way to go about doing this. And we found that if you've got 50 to 1,500 employees, at the low end, we're saving somewhere in the neighborhood of $185,000 to $200,000 on your EV premiums. And at the high end, the number is much, much greater than that. And again, so you talk about innovation and regulation, you have to carry employee benefits, right? It has to be done. This is all compliant with any regulation that you're going to find, but we're trying to innovate to get away from the traditional way of thinking and create solutions that just aren't really there.
So we've been talking about, during all of the conference about connectivity and collaboration kind of being themes. But I think another theme is social justice, social equity, ESG, whatever we want to call it. And so, I think this panel is pretty timely in that fashion. So, Laurie, you are an EA applicant. And so, obviously, we heard from Commissioner Hoffman earlier, and that his goal is to increase, participation in the industry for EAA, social equity, people of color, et cetera. But I guess my question to you, and then I'm interested to hear from everyone else, is has this status, has it helped you? Has it hindered you? I'm assuming maybe a mixture of both. And I guess if Commissioner Hoffman were here today, well, he was, but if he were still here, as a regulator, what would you suggest to him might be worth changing in order to facilitate these goals?
Hello.
Hello.
Big Mom. Yeah, how's everybody doing? It's a little strange to be on a panel, half virtually, half the guys in person, but thank you for the question. So my perspective is, as an EA applicant, it didn't help that much in the sense that we still had to fundraise, we still had to identify real estate, we still had to go through the same paths that everybody else has to go through. The issue is, if you don't come from a very privileged background, it's very difficult to raise money, especially since banks aren't loaning. So what I would say is the status is helpful, and depending on what the applicant wants to do with their business, it could be limiting, it might not be. So it requires people to maintain ownerships at 51 and 49%, which is great. But when it comes to you raising money from a private investor, it's not something they often like. So it's something where it's great, it protects us, but sometimes it protects you to the point where you can't raise money, which has occurred. So I think I spoke with Sean, who is the CEO of Elevate, where he talked about strategically deciding to take a hit on the first business so that he can then propel himself forward on the other one. So having that type of status prevents you from doing things along those lines. And what I would suggest is that if there are any abandoned state properties, make them available for economic empowerment applicants. That's going to remove one barrier, real estate. Also, the equity fund that's supposed to be created, actually created and provide funding to the businesses. Even if it's not a grant, even an interest-free loan would be more than sufficient to help overcome the barriers associated with fundraising.
It seems to me that raising money is so crucial to facilitate social equity, social justice, and that's where things fall apart. How did you go about funding, raising money?
So we completely bootstrapped initially, with all the funding coming from the partners. And my partner Ulysses had a friend who we played college football with, and his friend's dad owned a construction company. And so when they realized that we were getting hosed, with the cannabis tax, right? Everybody wanted an extra piece from the architects, the engineers. So he came in and said, you know what, fire everybody. And he just started constructing. And so most of the investment came from actual services, then putting up materials up front. And in terms of product, we were able to get a lot of our product on consignment with terms, so we didn't have to pay up front for a lot of the products we sell in our store. So those are the ways that we're able to, reduce our costs and not have to raise a lot of money up front. Also, our landlord was one of our investors who invested to bring the property back into code. So a lot of it was through good old group economics and going into our network.
But, so Jacques, I know you're, and actually most of the panelists here are involved, not just here, but in other states. Jacques, your company helps people obtain licensure and provide other consulting.
Yep.
New markets are opening up, right? New
Yes.
York, New Jersey, Connecticut, the list goes on. In those states, how important is social equity?
I mean, all the states right now have social equity components, right? Illinois had it, 50% of the Connecticut future license going to have social equity. I think it's 30% in New Jersey. So they all have social equity components. What surprises me, and Laurie and I were talking about that last week, is I'm not sure it actually accomplishes what the social equity program is supposed to do. I mean, if you look at New Jersey, you get the impact zone, so they have a chance to have a better, or have a chance to have a license, and you have the social equity. But then, you know, the impact zone is high crime, high unemployment, right? So if you put on top of that the social equity component, how those people are going to be successful? I mean, we just talked about raising money, and they still have to pay the same license. And then when they're going to raise money, we all know it's going to come with some terms. And so somehow, you know, the license is supposed to be 51% social equity in an impact zone, but then how do we help them being successful? So I really like the idea of the social equity component. I'm not sure 50% of the license have to be social equity. Maybe it's only 25%, but then make sure maybe we need to give more or find a better program so at least those 25% have a chance to be successful on their own or with the right partners.
So, you know, the theme that I keep hearing about is lack of money targeted
And talent.
for social equity.
It's not only money. I think it's money and talent.
Okay.
You know, I mean, not that people don't have the talent, but, you know, we all know that to build a company, and for sure in the cannabis industry, you need a lot of talent. You need a lot of, you know, good CPA and lawyers and insurance. And how do you bring those talents on top of the capital to, you know, people who may be living in an impact zone and they don't even know where to start?
Well, so let me ask my banking guru, Katrina, since all of you are my gurus. Katrina, you know, you've worked with banks, getting them helpful to compliant to bring on deposits from the cannabis space. I mean, why aren't more banks lending and or considering social equity in their lending programs? I know we were just talking about this.
Unfortunately, I think it's because of systemic problems. So banks aren't lending, or more banks are starting to lend as they get more comfortable with cannabis banking. Banks are worried about seizure issues, and so everybody thinks that if the Safe Banking Act passes, then more banks will lend, and then they will get more funding will be available. But I don't think that's true, because all these federally regulated banks or state regulated banks have underwriting regulations. And so it doesn't matter. If you can't meet their lending criteria, it doesn't matter what category you come from, what color, what gender. If you don't meet their credit ratings, you don't get a loan. And unfortunately, I was speaking with a CEO from a financial institution who was going to create a lending program for cannabis. And I said, will you please earmark some for social equity applicants? And this CEO said to me, no, you lend your own money. They're a credit risk. And at first I thought, you must be joking. Like, nobody would actually really say that to me, but she was serious. And that's what happens. So even if they want to help the cannabis industry, their regulators are going to come down on them, and they do go through the portfolios and they take a look at what those credit risks are and how is it going to affect the institution. And so it's a top-down problem. I mean, it's part of the bigger overall systemic problems that the entire country is facing. It's just one part of it.
And so then I gather then, if the Safe Banking Act ever passes, and I'm going to ask you where it is right now, what's going on, but will that assist kind of opening up some funds for social equity in the cannabis space, or is it just always going to be an issue of underwriting standards?
I mean, it may be if they have specific criteria and specific ways to mitigate their own institutional risk, but I don't think it helps. every time I read an article about, okay, the Safe Banking Act is going to pass, it needs to two things. Remove cash from the street because of the public safety issue, and then also open up lending. That lending is going to go to those people who meet their underwriting criteria. I do not think the Safe Banking Act is going to facilitate a change in lending criteria for financial institutions. So.
Somehow, what the cannabis industry and the social equity program is missing is a little bit like the 504 SBA loan for real estate, where you have
Right.
guarantees that help you get some funding. And right now, it's a difficult industry to raise money. It's a very difficult industry to get loans. And on top of that, social equity, if you have no guarantees, no assets, then you're
not getting
in
money.
the wall. So somehow a 504 program guarantee, I mean, of course the SBA isn't going to do it anytime soon, but that would help.
Yeah, 'cause if you read the text of the legislation, there's nothing in there about changing, right? And there's nothing in there about changing those criteria for financial institutions, and they're not going to do it independently.
So, one of the other, I think, not issues, but hindrances for social equity is sometimes finding the right professionals, right? And obviously everyone here is a leader in their field, but it seems to me where things fall down is on the tax end, right? Because a lot of people get into cannabis and they've heard about this 280E thing, and they're like, oh, that's not that big of a deal. And then like the first 2 years, they're losing money essentially and paying taxes even though they're losing money. Kevin, where do things stand? I mean, it seems that court challenges of 280E are going nowhere. I know there's been some innovative-ish sort of looking at the code from the 2017 tax changes. Where's that stand? Is it viable?
Is it viable? So let me start with this. If you think about the scales of justice and were to put it as like wins and losses in federal tax challenges with respect to 280E, the win column would be probably 1 for cannabis companies, as opposed to all of the wins that the U.S. tax court has had. And when the Tax Cut and Jobs Act was enacted in 2017, one of the provisions was the creation of 471C. That didn't get a lot of attention at the time because there were other kind of headline news about reductions in corporate rates, small reduction in individual tax rates, and so which actually had a positive impact on the industry. And this lesser known, but one that is getting more attention these days, is 471C, which was enacted to provide small businesses with simplified inventory accounting. And that's important because if you're subject to 280E, which many states conform with, or maybe, well, I'll just pause there. And so it's important because you're taxed on your gross profit. So revenue less cost of goods sold, gross profit, that's what you're taxed on. All that SG&A, all those operating expenses effectively become a dollar for dollar cost. And you used one example, and we've seen it time and time again, which is you can be a pre-tax profitable company, but once you add in 280E, that changes it, and you could potentially be otherwise, you take a profitable company and now is no longer profitable once you include the taxes. And so at the time that this happened, like I said, didn't get a lot of attention. Regulations with respect to this weren't issued until January of this year. And so there's been a time period, so this is kind of common with taxation, particularly for cannabis businesses, there wasn't a lot of guidance. And then so with the lack of guidance, I would say cannabis operators took some aggressive positions, understandably so, based on what I just mentioned, to say that, okay, well, now I can use 471C, these simplified inventory accounting methods, to effectively include in cost of goods sold costs that you otherwise are not able to. Now, the problem with that is it's kind of contrary to the intent, and as the proposed regulations came out, as the final regulations came out, it was very clear, actually really from the start of the proposed regulations, that this wasn't going to work. And so understandably so. Most people don't read the preamble to the regulations and oftentimes don't even read the regulations themselves. So it really got, so as we're doing transactions and now that we're getting into the historical period of when companies have tried to adopt 471C to mitigate 280E, it's becoming, you're taking already a potential tax exposure and it's getting amplified by that. And as the industry has matured, companies are bigger. So you take the fact that, okay, you don't really comply with 280E, you add this 471C issue, amplifying it with the size of these companies. The trend for some years has been that the buyers are unwilling to risk share. In the earlier years of the industry, they were willing to risk share with respect to a number of risks, including tax, and that's changed. Like that's all gone. They're now willing to do risk sharing. So it's something definitely to keep in mind, particularly on the sell side. And it may be like is a good dovetail, not necessarily the sell side, but the taxes in general and policy, and the purpose of this panel is innovation, disruption, and that would dovetail into the House's introduction of the MORE Act, so the Marijuana Opportunity Reinvestment and Expungement Act, which was introduced in Q2. That was followed by the Senate's similar proposal, the Cannabis Administration and Opportunity Act. Both of them are looking to deschedule cannabis from 280, or well, descheduling cannabis would then take it out of the purview of 280E.
So that's good, right?
Yeah, that would be good.
I sense a but coming.
Yeah, it's definitely a but. It's kind of like everything with respect to maybe regulations, including taxes. There's a lot of caveats, limitations, et cetera. And the MORE Act, and I'll start with that because I think that, again, that preceded the Senate's version. And what it did was, and the reason why it's disruptive is that you're getting rid of that, but you're also opening up interstate commerce. And that is without a doubt, a game-changing moment in the industry, right? But their proposal, similar to the Senate's bill, is to replace it with an excise tax.
Right.
And that excise tax, the comments around that, which makes sense, is that really sound public policy? Because if the public policies around health, public health and safety, and the tax is based on the value of cannabis as opposed to the externalities associated with it, and not accounting for, and so the positive impacts, right? So for example, if we, so by descheduling cannabis and that opens it up to use by more people, and that is a substitute for other, let's say, more harmful licensed and regulated products, that needs to be accounted for, and that's not in both of those bills.
And I've seen in some legislation, they're talking the excise tax. Year one's 10%, it goes up to 25%.
Right. So that's the Senate's version.
Right.
Yep.
Right. And also there's tax hikes on the horizon for corporations. How much it will be, who knows? But with the tax hikes, and let's just say up to a 25% excise tax, I don't know if you've done the calculations, but have you really escaped like this cannabis tax that Patrick was talking about earlier?
No, I don't think you've escaped
is it better than, is this better than 280E?
It could be worse in the sense of you look at how this will impact the market all the way from the operator to the consumer, and those that just the communities that they operate in. So for example, the way that with both of these, the initial phase of these excise taxes is based on the manufacturer's value. And so when you have a excise tax that early in the supply chain, you get tax pyramiding because in part you have sales tax. And so many states, I think like 16 of the 18 adult use markets, have a cannabis tax in addition to the sales tax at the time of sale, so on the consumer. So when you have these, and I think California is probably a really good example because they already have this in place at the state level. And so you have this pyramiding of the tax that you're already taking the effective tax rate on cannabis. We're not helping, I think, with the goal, one of the goals, public policy goals, is to eliminate the illicit market. So there's just so many factors that are at play here. And that's not just at the federal level, but then the interaction of the states with the federal government, it just kind of goes on and on and on and on.
So, one of the themes we keep talking about is, collaboration, connectivity. It's an ecosystem, right? I mean, 15 years ago, we've said it takes a village, but that didn't really work in 2016. So now it's an ecosystem. And so, Laurie, I'm going to throw this question to you. We all come from various fields that make up the ecosystem, banking, insurance, law, accounting, consultant. Geez, we are an ecosystem. What can as an EEA applicant, as someone who is very much fired up by the concept of social equity and eradicating the inherent racism in our system, especially vis-a-vis cannabis, what can the ecosystem do to assist that cause? I know this is a new question, but I didn't prep you on, but I'm sure you have an opinion.
No worries. I think it's education. I think the federal government, along with the media, have had a head start since the 1900s of miseducating the American people. There are doctors who graduate without knowing that human beings have an endocannabinoid system. There are doctors who graduate without a nutrition course, both things that are very necessary for health. So the miseducation is occurring on so many levels that no matter where you are, your job is to get the best information and transmit it to whoever's around you. Because you can't even understand the number of times I'll deal with somebody who's actually servicing people in the cannabis industry who still has lingering remnants of Anslinger's rhetoric. You know what I mean? They still kind of feel like, cannabis might be a gateway. And that needs to be eradicated at the top and at every single aspect of this industry. So education to me is where it all starts. I think we need to spend the 10, 15 years just focusing on re-educating the American people.
Well, good luck with that. But, and then kind of going forward with this theme of collaboration, there is collaboration amongst all of us, but Simplify, I know, is looking to do some collaborative work with Hub. And since I have the two of you on the podium together, Katrina, we haven't really talked much about compliance and what Simplify does, but maybe you can just kind of give us a little bit background in what you and Hub are planning or trying to do.
Sure. When I left Burns & Levinson, I went to Simplify because they're a technology company, first and foremost. And the intersection between the cannabis industry and technology is fascinating to me. But they have primarily serviced licensed operators by providing an automated checklist. And it sounds really simple, but if you've ever read the book, The Checklist Manifesto, it's about taking routine tasks off your employees' plates so they can focus on bigger and better things than just compliance. And it sounds easy, but it's not, because it's cannabis, right? So every single state has different rules, and we have a regulatory affairs team that monitors the rules and regulations. So like in Colorado, there's 1,300 rules, and we monitor, and every time they're updated or they change, like COVID was awful. Like we had to make so many changes when the emergency rules would come in and out to make sure that our operators were up to speed and actually compliant with the new rules and regs. So they do that part, and we've been focused on licensed operators, but we also realize that the ancillary service providers that work with them are equally important. And so, but they don't have the same compliance burdens. So we are rolling out a new product called Reg Pros, which are regulatory profiles for all 50 states that highlight some of those categories that I believe as an advisor are super important for people to look at. So to note, license caps, number of licensees, the population of a market, whether it's vertically integrated, what are your advertising rules, that sort of thing. So it's a snapshot, and our Reg Affairs team, which has attorneys and technical writers, are monitoring and constantly updating. But there was one section I really wanted in there, which was insurance, but we don't have that internal expertise. So Patrick, we were sharing the new product with Hub, so I thought some of their producers could benefit from it. So Patrick and Hub generously offered to go ahead and provide the content for each state on what the insurance regulations are, what products are out there, bonds, that sort of stuff. And they're going to be one of our strategic partners. We're also going to look to work with Cohn Resnick on tax issues, and also Burns and Levinson, because they're going to help us on lending and security issues, especially for financial institutions that are trying to get into this space. So we're trying to work with the experts, because although we can, we have the legal expertise, but we're not the lawyers, we're not the advisors. So we want to give snapshots, help licensed operators and ancillary providers get the information they need, but when to start and to leverage those resources and then spend the money where they need to, not getting up to speed, but rather working with their expert advisors on where they need to go.
That sounds interesting.
Yeah.
Especially the fact that we're involved. You might want to hit up the other two on the
Right,
panel.
exactly.
With, Massachusetts in the past year has seen some regulatory revisions and changes, and part of that has resulted in new license types and sort of new control rules, et cetera. Laurie and Jacques, I'm wondering if maybe you can talk a little bit about that. Laurie, specifically, you've gone after one of these new delivery courier licenses. How has that process been? Is it really going to be a game changer? Why didn't you go for the other type of license where you could wholesale and deliver directly to consumers? And then Jacques, if you have any follow-up, that's great, and I have another question for you.
Well, thank you. So we went for the courier for a simple reason. Because of the way that our business is structured, it really doesn't matter which license type we have, because we have a manufacturing kitchen, we have retail, so we can definitely take products, put it in our retail store, and then deliver it on our own. When it came time to choosing between delivery and operator, Worcester's regulations were written in a way that only allowed courier, and in order for us to go for the operator, we would have had to wait for Worcester to change their ordinance, and we weren't about to do that when it really didn't impact our operation at all. So that's why we went there. Now, do I think that the operator license is a game changer? Yes, it is, if you don't have a setup like mine. Like, if all you want to do is deliver, the courier license, is financially, not viable. In order, for you to deliver, you need to have 2 people in the car, body cameras, the car has to be outfitted, and, that's just a lot of overhead. And I don't think that it would, especially we just talked about taxation, it just didn't make sense for the courier model. Now, the operating model that allows you to warehouse products, repackage products, that definitely provides applicants a little bit more of an opportunity to make some money. Where the only place where I feel like they may have to put in some more time and effort is with marketing and getting their name out there. Not having a physical location where customers can walk into might be impediment, but I'm definitely seeing people in the market do it right.
And, I'm going to say something that's probably controversial, but why stop now?
Won't be the first time.
When these type of licenses came about, there was a lot of discussion how, obviously they're exclusive to EA or social equity for 3 years, but this is a great entry point, for people of color or social equity to get in because it requires less of a financial commitment. I mean, it seems to me that's almost kind of like a cop-out, because it's kind of like, well, we'll give you this type of license that's really easy, that you don't need much financial support, but yet you're not going to really make as much money as you would as an operator, whether it's cultivation, micro, operator, whatever. And am I off base, Laurie, or?
I think that for the courier, that's definitely accurate. For the wholesale operators, I'm interested to see what business models we see. I don't think it's necessarily as difficult to make money as an operator as it will be for the courier. But I do agree that, initially it was definitely a cop-out. And I think that when we're thinking about social equity, we have to think about more about the impact and what are we trying to accomplish and business accomplishment. We said we wanted to have an inclusive industry, but then they said, okay, we only care about real inclusivity with delivery, but the market is such where it's difficult to even navigate it. So I see what you're saying. It is a little bit cop-out-ish, but
I mean, just for numbers' sake, right? So if you're looking to just say, okay, we have all these people of color, but like 80% are courier, and like no one's really in sort of like a vertically integrated business, does that skew those numbers? And I'm not saying that we shouldn't support courier, but.
So you're probably saying, how do we integrate people in the other license types as well? And I completely agree with that. I think the barriers to entry in the other license types are exorbitant, and I would like to see the state actually put their money where their mouth is and actually start issuing some loans to applicants. That will be the game changer.
That's key. And Jacques, what do you see?
Well, so I think actually it's getting easier to get a license. I mean, the first license I was involved in was 11 years ago, was the first one in the East Coast, and it was a vertically integrated model. And at the time, I was like, that doesn't make any sense, because how come a company can be retail, logistics, production, manufacturing, and granted, there was only 28 applicants. When you look at how many people apply now, it's different. But anyway, at the time, I was like, this is tough. You have, in one company, you have to have all that talent, all those things. Now it feels like all the states are going away from the vertically integrated model and focusing on manufacturing, cultivation, wholesale, retail. And I think it gives a chance to companies to actually grow and see what they like. So people are going to try to go do it all, and some people are just going to focus on retail. And at the end, I think that's what's going to make the cannabis industry successful, because I would not be surprised that in the next few years, we see people not doing cultivation at all, but they're going to be in 15 states just like retail. Like Starbucks doesn't do their own coffee. I mean, I don't know Starbucks that much, but I'd be very surprised that Dunkin' Donuts owns any coffee fields anywhere, right? They're just a retail coffee shop. And so I think that's going to be the same, and it's going to leave a room for people just to open the equivalent of a local coffee shop, or go all the way to be the Dunkin' Donuts of cannabis.
And I just want to add on to ESG, and I realize there's a lot of challenges to that, but I think it's something to be proud, if you operate or an advisor to cannabis companies, that there are not a lot of industries that are nascent and are including ESG public policy goals in their laws and regulations. And thankfully, ESG is something that's gotten a lot of attention in recent years. And so I think given that, and just cannabis, it's just going to take time. But thankfully, I would say that the intent is there, and it's just with all things, it's just improving upon or having the law and the regulations make sense for what's happening in the market, and that just has to continually to evolve.
Well, and especially since the cannabis industry is so dependent upon cultivation, which utilizes a lot of energy, water, resources. So the concept of ESG, the environmental component, sustainability component, seems increasingly more and more important, and we see that across the board. So apparently I've ran over yet again. So we still have some time for questions. Does anyone in the audience have any questions they want to ask of the panelists?
Hi. So I just want to preface this. I come at this with a lobbying perspective, because that's how I got into cannabis. But it seems like the bulk of the conversation around regulation and legislation in the cannabis space is very reactive, where you look at companies like Uber, or you look at what's going on with sports betting now, and you see industries, both in terms of associations, but in terms of individual companies, making much more of an investment in trying to drive the policy instead of waiting to see what happens and being positioned to react. And I wonder why you guys think that is.
Anyone want to?
Well, I think that is happening, but I think you're right. It's not happening at the scale of those companies, and part of that is access to capital. The amount of capital that I think those industries have, and the lack of limitations or restrictions that they have. I don't think there's anyone that's an operator that wouldn't say that they're interested in more proactive and having influence on regulations. It's just they've all, for just those reasons I stated.
But there are lobbying groups.
I also think another aspect is that the regulators are trying to appease the phantom fears of people around cannabis. You feel me? Because we all know that they're phantom fears. And in trying to do that, they try to really, I think they move very slowly, and they have to be reactive because they don't know fully how to integrate the pre-existing culture of cannabis and this new legal cannabis industry that they're building, not knowing that the people have been aware of this, of the legacy market for a while. Is this making sense?
Yeah, I think
Is
we were
the tension
talking,
with the regularly?
when Laurie was talking about education, our president isn't in support of adult use or even legalization of cannabis, right? So it starts at the top, and I don't know how you educate some of those leaders on the Hill at this point, you know, Mitch McConnell, that sort of stuff, and maybe it does take some time. They have to just get out of there, but at the same time, it might be what our earlier, the luncheon speakers were talking about is consumer driven. So pretty soon consumers are gonna want the companies and the brands that are worried about sustainability and that sort of stuff. But again, with a fragmented market and, you know, patchwork of rules and no coherent federal policy, that's probably why there's not a lot of momentum that's changing it proactively.
I think also the industry is not unified in their goals.
Right.
There's a lot of pockets of, you know, from the, you know, early on activists to the very capitalistic oriented people, and then everybody in the middle. You know, there's, you know, we don't have yet the same goals as an industry. So Uber has got one goal, right? Getting us from point A to point B, and everybody's on the same page. This is not the case here yet for the cannabis industry. I'm part of the National Cannabis Industry Association, and we're trying to come up with standards in facility design, right? You would think that it already exists, but that's not the case. I mean, you know, so we have, I think, a few more years before everybody's looking at the industry kind of the same way, thinking, okay, if we find a common goal, then the regulations and everything's going to come in place.
But it makes sense, right? An MSO has different interests, both
Absolutely.
economically, you know, up and down,
Yes.
than you know,
Laurie.
like Laurie's
Yeah.
company does. And you know, then you know, up and down the food chain, there are groups that just do cultivation. So what do they care about retail? And you know, 280E, because 280E doesn't really impact as much cultivation if you're doing cultivation only.
Well, and remember what we heard earlier, 2 or 3 of the panelists says, we hope we're going to get bought. So I didn't hear, I hope we're going to create better standards for consumers or operators or better regulation. It was all about, let's get bought out. So until, you know, I think we don't have the same goals, and everybody's, you know, not unified to get the right regulation that's going to help us get to the national legalization.
Another question? So Katrina, then I will ask my usual question. Is the Safe Banking Act going to pass ever, or this year, or this decade?
That question's the bane of my existence with Scott. I always am like, I can't write about it anymore. I don't think it's going to pass yet. Just because, I mean, I think it was a huge step that it got tacked onto the Defense Authorization Act, but based on Schumer and Booker and how they want more comprehensive reform, if they block it in the Senate, it doesn't get through, and we're right back to where we were 6 months ago and last year as well, you know, right? Perlmutter said, 5th time is a charm.
Right. So is the 10th.
Right, exactly.
And Patrick, you know, there's a similar act called the Claims Act, which would provide similar safe harbor for insurance companies. I haven't really heard as much about that recently. Any thoughts? Like, is that really driving the insurance industry, or is it just kind of like, yeah, if it happens, it happens?
I think in the insurance world, it's more if it happens, it happens. Insurance is a lot like other people's fantasy football teams. Nobody cares about it. But
Until you have to make a claim.
Until you got to make a claim. No, but honestly, these insurance carriers, the biggest ones, are thriving in a hardened market right now. We've got a lot of economic turmoil in the country and on an international basis, and so they are in a position right now where they're trying to stabilize their own books of business and figure out how to kind of get through this rough patch, whatever COVID looks like. Is it bankruptcies? Is it layoffs? Is it, you know, arson? Is it going to be, you know, climate change? What's going to impact their current books? And so focusing on growing their cannabis business right now isn't where insurance companies are focused. So I don't think it has import at all.
So I guess we are out of time. If folks have questions, the panelists will be around. Happy to take questions. Hopefully, we'll see you all here again next year, and we can ask the same questions. Hopefully, we've seen some growth, right? Although, sadly, I have a feeling we won't see as much as I think we all would hope for.
But we'll see new innovation, right?
Yes,
Like, I mean,
and that's the point of this
what's great
conference.
about this industry.
And that comes from collaboration
Right.
and connectivity.
Right.
Because it is an ecosystem. And I've run out of cliches. So thank you, everybody.
Thank you.
Thanks, Scott.
Thank you so much.